Project delays. Something we all tried to avoid has now become unavoidable. How can we track and reduce the risk this creates on our programs? I remember in 2008, right out of graduate school, my first job was working for a general contractor. They had me updating all their project schedules and expenses to reflect a 6-month delay in funding due to the housing market crash. They used a combination of QuickBooks and Excel, which was cumbersome and mostly out of date. It was really hard to get an accurate forecast of how these changes would impact the company, and even harder telling the owner of the company, my father, that I did not have an answer for him. Jump forward 12 years. COVID-19 means there are project delays, and anytime there are delays, the cost goes up. But by how much? For how long? That's why these modules we are going over today exist. To make a guess, we did not have that technology in 2008, but we have it today. So I'm going to discuss how to use this time as an opportunity to update your project's forecasts and cash flows and report the financial impacts these project delays will have on your program. So let's get to work. In my 8 years of training, implementing, and managing these specific modules for our clients, I've seen a lot of confusion with the complexity of the terms and options. We have found that stripping the module down to 3 key components makes it much easier to use. And those are the components I'm going to go over today. So first off, updating estimate at completion by using the forecasting module. That's also known as updating the amount that is needed to complete the project. Updating the project duration, which can be done either in the project details page or with the schedule module. And recalculating cash flow using the estimate at completion. So let's jump in. Using forecasting to update your estimate at completion is the easiest way to identify the cost impact that risks will have on your project. This is going to entail reviewing the key definitions of the cost module and how to work within the forecasting module. So let's jump into eBuilder and look at our cost summary. I'm in the Avicado Medical University Center project, and I've created a layout that I call Cashflow, which just has key columns in the cost summary that are needed when working with forecasting and cash flow. And I want to specifically right now pay attention to the planning line item. We have a current budget and planning of $750,000. We have commitments of $700,000, which means that we have committed or accepted contracts of $700,000 of that budget. We may have some potential changes that we've entered in through the cost module or through a PCO process. All of that is being calculated here in column B. We have no forecasted commitments yet, but we'll get to that here in a second. And that leads us to our unallocated reserve column, which there's $50,000 in. The unallocated reserve is probably the most confusing column in eBuilder's cost module. And it's really important that we understand it when we use forecasting. So unallocated reserve is the forecasted expenditures that are not yet tracked in a commitment. And we can see that easily visualized here, where because we have $700,000 committed and a budget of $750,000, my unallocated reserve is $50,000. And when you use forecasting, the first money that we forecast is going to consume the unallocated reserve before it updates your estimate at completion. And I'll visualize that for you in the module, but know that only when I burn this down, this $50,000 down, can I really increase my estimate at completion. So we're going to jump into forecasting now, and I'll show you how we can update the EAC in a very flexible way using the planning line item here. So on the left, I'm going to go to my project menu, and I'm going to click on forecasts. Now, had I been working on this project for several months, years, and updating the forecasting module once a month, you would see a bunch of snapshots here that I might have wanted to save and compared. You would see previous forecasts from previous months that were updated that you could base your forecast off of. But this is the first time we're going to update the forecast on this project, still in the planning stages. So I'm gonna go ahead and hit add on the top right. And I'm gonna forecast period as of live. If I had previous months that I entered forecast for, I could use and play with the numbers that I captured at that point, meaning if my actuals paid were $100,000 in February, and that's changed up to now, I could use the information from February if I wanted. In this case, that's not relevant. So we're gonna use the forecast period live, and that's just gonna use real-time data. So I've gone ahead and clicked continue, and it's now gonna load. The first thing I like to do in forecasting is I like to group by category, and then I like to collapse all. This makes it much more manageable. When everything is expanded, it's a little overwhelming. And then a new feature that just came out within the past months that's very helpful with cash flow and forecasting, and I'll visualize it for that, visualize it for you. I'll click the plus. I can hide all zero value line items. So in my planning category here, where I have 5 line items, I really only have a budget for 2. So I don't need these extra lines. So I'm just gonna hide the zero value line items. And you'll notice now when I collapse all and go back to planning, I'm only dealing with line items that have money in them. So once again, just makes my field of view a little easier to consume on one screen. So now I wanna go in and I wanna increase my estimate of completion for planning. I wanna increase it by $500,000, sorry, $100,000. So I'm gonna go ahead and I'm going to click the plus here. And this project is being delayed 3 months, and it's gonna cost money to restart the planning process. So I'm gonna go ahead and I'm gonna put that to restart planning. We're gonna assume a 3-month delay at $33,000 a month. And so I'm gonna go ahead and I'm gonna put my 100,000. Now, before I click out of here, notice that my unallocated reserve, once I actually hit enter, is going to draw from first. It will go to 0, and my estimate at completion, instead of being 600, will be 550. So my forecasted commitments now is 100,000, which is what I just entered. I've drawn the $50,000 from my unallocated reserve, and now my estimate at completion is $550,000, or I'm over my budget by 500,000. Let's say that this change was more of a potential budget change, or we're forecasting a budget change as opposed to wanting to draw from our unallocated reserve. We can do that one way, and that's by unchecking budgeted. So what this does is this leaves my unallocated reserve intact, and my estimate of completion is now 600,000. And this is a great example if you know that you're gonna need to do a budget change, but it hasn't been entered in the system yet. If you're waiting for approval, or if you're just trying to play around and see what would happen if you did enter in a budget change to your cost module, you could go into forecasting, uncheck the budgeted check mark, and play around with not touching your unallocated reserve. Most typically, if you're doing this based off of commitments, you're gonna leave this budgeted item checked. So I've gone ahead and I've burned down the remaining $50,000 that I hadn't committed. I've added another $50,000 to my project. So I've got an estimated completion now of 550,000, and that's for planning. Now I'm gonna go to a different line item which doesn't have any money yet spent. I'm gonna go to construction. And here's an example where I know my budget's gonna increase now. So I haven't gone through my bidding process. I haven't gotten my main GC added yet, so we don't have their commitment in the system. But I know that my GC's staff's gonna need more time over these 3 months. I know that there's gonna be additional PP&E that's needed on this project over the next 3 months, which might be a little slower. So I'm gonna go ahead and I'm gonna put GC staff increase. And I'm gonna say it's a $200,000 change. Now, because my unallocated reserve is so high and I don't have commitments, And because we said this is most likely a budget change, I'm going to uncheck budgeted so that my estimate of completion does go up 200,000. And I'm going to do the same thing with additional PP&E. So I'm updating my estimate of completion. It's gone from 2 million in this case to, 200 million in this case to 300,000. And my estimate of completion has also gone up from 500,000 to 550. So I'm going to collapse everything now to get my view. And you'll see I've forecasted an additional 400,000. My unallocated reserve has been drawn from in some cases, but now my estimate of completion is 289 million, which makes me $350,000 over. So that's what we wanted to go ahead and show. I'm going to go ahead and save final. And I want to save my snapshot and forecast. So by saving the snapshot, I can compare this to additional versions of my forecast in the future. So let's say, you know, things are changing by the day. Let's say that the project is delayed another 3 months tomorrow. I can go back in, edit my forecast, which is in the current period, but still compare it to the forecast I made today. So that's how you can work with snapshots. So now that I've updated my estimate at completion, if I go back to my cost summary for this project, you'll see those changes are now reflected. My estimate completion on this module 2, my forecasted over under, I'm forecasting to go over budget by 350,000. And now this will be reported across all of my program and across all the reporting mechanisms that I've set. So now we want to go ahead and see how it affects our cash flow. And in order to do that, we first need to tie the schedule to the cash flow. So in order to properly show how cost and schedule delays will impact the cash flow, we need to tie them together. And this is done with project dates, and there's 3 ways to do this. The first way to do that is with project details, overall project schedule, or the most granular is the task-based schedule. So I'm going to show you how to do all 3 of these. The project details is the least, is the most, I'd say, provides the biggest estimate, where when you dig into using an actual schedule module for these, you get a much better estimate. And then the most granular, most accurate would be a task-based schedule. But clients' use of the schedule module, in my experience, varies. A lot of people don't use it at all. Some people are just using it as a summary level. So I want to show all 3 ways so that you're not hamstrung into one. So let's go ahead and open up this project schedule, or open up this project. All of these changes, when you're tying the cash flow to your schedule, it's done inside of the setup of your cash flow. So I'm now going to go to the cash flow on the left. Here's where you see my cash flow is as of today. And I'm going to show you where you could change how your schedule is tied to cash flow. And I'm going to hit setup cash flow, which is the middle button. So your cash flow curve, this is something that you would have had already set up at this point. I don't think the curve will change due to project delays. This is usually just based on the type of construction that each budget line has. And I won't go into detail about how the curves are set now, but if that's a question at the end, feel free to ask it. What I want to focus is on the schedule link type. So every budget line in your project, you could apply one of those 3 ways that we talked about. You could link it to the schedule module, you can link it to specific tasks in the schedule module, or you can link it to the project. Let's start with the project. And when I link a schedule to the project, that's done through the project details. So once I've made that change, I can go ahead and hit save. And if I want to show a 3-month delay, I'm just going to go to my project details. I'm going to hit edit. And I'm going to update my target date to now be September 1st, 2023. So I'm just going to push it out 3 months using this. So this is a great way if your company does not use the schedule module in eBuilder, doesn't want to tie it to the schedule module in eBuilder, to still be able to use Cashflow and have these delays be effectively reported. So simply just updating it to show 02 to 09 will now, when I go to Cashflow, show a 3 more months that we need to project cash out for. The second way, going back to the screen, is linking it to the schedule. So now I'm going to go to the schedule module itself. And because I'm linking it to the overall schedule, I just have to update any of the tasks in order to show the difference in time. So right now we're looking at a schedule that finishes on 6/22. So I'm just going to go ahead and update my planning to say that instead of 30 days, or instead of starting on the 3rd, we're now going to start on May 5th. Cinco de Mayo. And now you'll see that my project is updated to show 9/22 as the finish date. So I'm just going to hit save here on the right. And that has the same effect I just showed in the project details. The cash flow will now, when we update it, take into account 3 additional months of time. And then lastly, which is the most granular and probably the most accurate when you're using these tools, is to link it to tasks in your schedule. So every task in your budget, or every budget line item, you could attach or correspond to a schedule task. So for my administrative, I might leave it at the actual overall schedule, right? And you can choose between, because that kind of doesn't really revolve around the schedule itself. But my planning revolves to planning tasks. So I can go ahead and set this up to planning. I can do my due diligence to set up that towards my project initiation. Just a way to get it more granular. And then if you actually once a month update any of these individual schedule tasks in your line item, when you recalculate your cash flow, it's going to change the dates that money is spent based upon your schedule. So it's really neat, accurate, and depends on your level of granularity. For this example here, I'm just going to link to the overall schedule, and I'm going to go ahead and hit save. So that's how you're going to go ahead and tie your cash flow to the schedule in order to show that there's a delay. So we've increased our estimate at completion to be an additional $350,000 for a 3-month delay. We've pushed out our schedule 3 months to also show that delay. And now we need to refresh or recalculate our cash flow. So we're going to do that. We're going to first go back to the setup of the cash flow and talk about one other component. And then we're going to recalculate all based off of the EAC. I'll show you how to do that. And then finally, we're going to save and be able to report on it. So jumping back to eBuilder, I'm in the cash flow module. And before we update our cash flow, one other item that may be valuable with everything that's going on right now is when I set up my cash flow, there's something called payment lag. So if you're basing your cash flow on the date that you've actually paid a vendor, or the date that the money has actually left the bank, you can apply a payment lag. So if you're now, instead of paying net 30, if you have to pay net 90 or net 60, and you hit apply to all, this will actually push the cash flow module out an additional 2 months, because every time you say something's paid, it's going to apply a 60-day delay to when it actually needs to be spent, or the money needs to be in the bank. So this may be a helpful unknown way of using cash flow, where your schedule is still accurate, but the money leaves the door a little later as part of a company policy. So I'm going to go ahead and make the payment lag 60 days, and I'm going to hit save. So now the fun part, I'm going to recalculate my cash flow. So I'm going to go and I'm going to hit update cash flow. So this is my March 2020. And notice how, even though I updated my cash flow a few days ago, I'm going to hide all the 0 values, just like we talked about. I still have remaining to be allocated. But the most important thing on this screen is that you forecast your cash flow using the estimate at completion. All right? That is essential to making sure that your forecasts are being used, and that it's not just using what your budget set at. So by default, it's not set up to your estimate at completion. However, I really recommend, especially if you're forecasting risk, that you use your estimate at completion for your cash flow. So projected budget does not take into account forecasting. Same with projected commitments. You want to use your estimate at completion. And notice when I switch to that, my remaining to be allocated is much higher for those two line items that we've created. We have $50,000 of additional money because it's now incorporating our forecasting. And then we have $300,000 for construction that now has to be entered. And when I scroll to the right, you'll see these additional 2 months now, all the way up to September. That's the payment lag. So there's no money that's been calculated into those columns yet. So it doesn't include the money that we just added, and it doesn't include the dates that we just expanded this to. So I'm going to go ahead and hit recalculate all. That's going to burn my remaining to be allocated and apply it to the curve into the formula of the new month. So now when I scroll all the way to the end, there's now money, obviously a very small percentage in the end, but you'll see it shifts the curve over. It shifts the curve over 3 months so that your cash flow is now accurate. So I'm going to go ahead and hit save, which is the last step for updating cash flow. You'll notice this, the curve is now changed. If you set a baseline in a previous month, you would see how it shifted on this screen. But I'll show you reports now and how to report this over. So now that we've updated our cash flow, we've set up the cash flow with the payment lag. We recalculated it all, with the most important option being selecting estimate at completion. And we've gone ahead and we've hit save. So lastly is reporting. So I want to show you how this reporting looks in dashboards. And then also what you may not know is by setting up your cash flow the way that you just did, you've unlocked the power of the planning module, which I think is a great module and really underutilized. So I'll show you kind of how that looks now that we've made these changes. So using these program-wide reports to track the changes of each period is what we'll do. So I'm going to go ahead and open up eBuilder. And I'm going to go to a dashboard I created. So here's a dashboard based on a few reports that I made. You'll see this is the curve, and these are the amounts of cash flow for each month. So this is a dashboard you could set up for your executive director. You could have all your projects for each program on here. And we just made a change. So this was updated at 12:59. Let's go ahead and refresh it. So we'll see now that this project shifted over a little bit to the right. Same, we didn't really add that much money to it. So you're not going to notice a change in the peak of the curve, but it did shift over to the right. And we would have also noticed that the month spend here is different. So that's one way with dashboards and reporting to report all these cash flow changes. And imagine the power of this across all these different projects that you have. If you make these changes and updates, you can really see in real time how the money is shifting because of these delays. But I mentioned the planning module. So the planning module is perfect in these scenarios. I'm going to open Avocado's 5-year capital plan. And you'll see here that I've got my funding set up. I've got my active projects. So my active projects here, Avicado Medical University, you'll see the money shifted over. So when I double click this, it actually shows my cash flow. So this is the curve that we've been showing today. But what you're not seeing, or what you're not able to do, is down here, you'll notice that it's actually calculating how much money I've overspent based on my funding. So these active projects are in real time. Every time I open this up, it's going to adjust based on the schedule of the project, based on the EAC, based on the cash flow. And it's going to, in real time, show me how much money I have left remaining in my program. So my planned projects here on the left, these I can actually move around. So now that I have all this data, I can more accurately plan projects and make sure that I hit and am not going over budget as changes in cash flow are done. So I can even zoom in more to show by month and see month by month what my cash flow total is going to be in the screen. And then if I'm over or under, how much money I have left to spend. So a really neat module that would add a lot of value. The one requirement in order to use this module is that you're using Cashflow. So without Cashflow, you can't use planning. And hopefully today I showed you a way that you could use the Cashflow module easier based off of forecasts that you've entered. And it's really kind of simplified a complex module. So, to review, we've updated our estimate of completion by using the forecasting module, also known as updating the amount that is needed to complete the project. We've updated our project duration. This can be done in the project details page or with the schedule module. And we've recalculated our project's cash flow using estimate of completion and reported on the variances and changes as a result of what we did. So we know that these times of uncertainty are frustrating. All of us at Avicado are humbled and very lucky to still have jobs and clients to work with. But let's remember to use this time as an opportunity to build a highly engaged remote culture, improve your use of technology, and come together as a community of eBuilder users to support one another in that effort. And at Avicado, we're doing that in two ways. Number one, we're starting to host these webinars. So this is the second one we've done. And the other way we're doing is we've opened up our EB Connect platform in Slack, which we've sent a link out. If you haven't joined it yet, jump on it if it's something that you feel like would add value to your company. Ways to interact with each other eBuilder users, get support on eBuilder, ask questions. So it's been a great tool, and we've had a lot of fun in there and built, highly engaged remote culture. So with that, I'm gonna turn it back over to Jackie, and we'll answer any questions that you have.